Hi, this is Sive Morten with the daily update on EUR/FX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the forex market, in particular on the euro currency. As usual, we have prepared vehicle report. This time I have decided to split it in two parts. I mean that I distribute the material equally between today's report and the forex market and tomorrow's gold report. Today we are talking about inflation. Tomorrow we'll talk about economic conditions in the United States. These topics are related to each other, so mostly they are linked very tightly. But it is difficult to read in one report, in a single report. So people tells that it's a bit too large, too much information, and it's a bit difficult to just absorb everything. And I decided that it will be better to just make it a bit smaller and easier for understanding. So this time I think, well, it's rather clear illustration our position that we think it's no rate cut will be in this year, or maybe we'll get one cut close to the end of the year based on statistics that we have. In fact, currently, guys, our major task is to not be caught by the hype that stands around statistics. So you could see what is going on actually. Just 1 week ago we've got strong CPI numbers and everybody was screaming that let's sell, let's go in short, Fed will keep rate for a long time. Now on Friday we've got surprisingly poor PMI numbers and everybody starts screaming let's go long, Fed will cut soon. So you could see what's going on here, especially in the gold market. So with our trading plan everything was going well until the really surprising data has been released. And as usual, external impact has crushed the technical background. So we should not be caught on this hype. We should stay on our course and just keep going what we intend to do. Keep going with our trading plan. As we think that there will be no rate cut, as we think that dollar will be strong just because of this moment, we should keep on this course. Besides, on the technical side, we do not see yet the opposite. And this time in the report we explain carefully and in detail why really big chance that this will be no rate cut from the Fed. We're taking a look at the yields, we're taking a look at the treasury market. Briefly, we're taking a look at the recent inflation indicators, not only on the CPI, because CPI is present in the media only on one side. CPI and PSE index is all. So just there, it is dropping, but no details. And if you'll take a look at these details, you will see that really situation stands a bit different. So as a result, we'll keep our view that euro will become weaker through the year. Despite sometimes we could get some period of the strength or something. And currently we're particularly standing in this stage of some strength. You can see that on the daily chart we're going with our bullish context. Overall performance here suggests that the nearest time we could get a bit deeper retracement. Take a look that just 2 weeks ago we were answering question what particular reasons could lead euro to the 109.70 area. And recent statistics that we've got answers this question, that's particular might become the one. So we've got bad numbers in the production, in the services, and everywhere based on the ISM index. So, and then that's become the catalyst of the stronger upper direction. That in turn leads us to the large possible head and shoulders pattern, which perfectly stands in a row with our long-term view that dollar should keep going higher. So, but let's go step by step. In the next week, we're interested with this performance. So, the Friday performance has given us nicely looking bullish engulfing, which means that in the nearest term, euro should try to challenge once again this top and should challenge this resistance area. So the question on how deep pullback out of the confluence could be, now as you understand, is closed. So retracement mostly is done based on the current momentum that we have on intraday charts, based on the sentiment and the data that we have got. It confirms short-term bullish context. Trend remains bullish as well. So based on this information, our direction is clear. So we do not have any reasons to consider right now any short positions. We're trading only on the long side. So on the 4-hour time frame chart, the result of this rally, you could see that we've got the bearish grabber right here. So I could show you it on the euro currency. So this is report. So on the euro currency, as you can see right there, we've got the bearish grabber. But at the same time, this grabber is not confirmed as by the fundamental background, the sentiment. So recent events on Friday absolutely doesn't suggest some reversal, which contradicts this pattern, as it isn't confirmed by performance of the dollar index. You can see here we have no grabber, just sharp reversal, forming reversal session, reversal candle. This market keep going lower. So this performance doesn't suggest any returning back to the previous top. Besides, recall the grabbers that we have mentioned on the dollar index on Friday, why we actually have expected this drop right back down. We have traded it just because of these grabbers. And take a look, these grabbers also have been completed. So market has created the top that stands in excess of this one. So it means that grabbers are completed. And from that standpoint, we have no technical reasons to suggest that market should return it back up to this area. Correspondingly on the euro currency, we should not expect that should happen, return right back down. So currently it seems that more chances that this is just appearing of the grabber here is just some byproduct of the starting rally on Friday and early close, just because it's just become the Friday. The market just has closed in a particular time, so it's just a combination that gives us the grabber. So I wouldn't rely on it too much. So as a result, we could suggest that the bottom of the right arm seems to has been set with a high degree of the probability, so it already stands in place, and we could consider the possible target of our 100 shortest pattern that we have, which is suggest OP around 109.88. This makes an agreement with the daily fib resistance level right there. Perfect combination, and kind of the ABCD pattern to the upside. From the technical point of view, we have got the explanation how market could appear at this level and how the hand and shoulders here could be formed. The one thing that we still need to get is some news releases, statistics that could push price right there. First suggestion at the payrolls on the March that we will get on Friday next week. If they will be poor, you easily could reach this level. Second, or better to say, early event on Thursday, it's European Central Bank meeting, where they, I don't know, hardly it will happen, of course, but who knows? Maybe they will say something hawkish. This also could push price there. But the one thing that we need to understand is that a lot of different events that exist that make it real for the euro currency to reach this level. From that standpoint of view, this is not something really unbelievable, so absolutely logical picture. All this stuff leads us to finally to the trading plan. As you understand, we'll be watching for some levels on the hourly chart, that where we could consider taking the long position. Hopefully this will happen without any excess. So 108.25 was my retracement, 108.14 if retracement starts right on Monday, or whatever it will start later in the session. Just keep an eye on the few levels, support levels, where we could take the position. And the validation point, all this stuff now stands, it seems it stands right below 108. It's confluence support here, and lows that market already have tested 3 times. So that in short the trading plan that we intend to going with next week. Let's see how it will turn.